All right, guys. So I wanted to give you this introduction to let you know that I have to fly out to the Carolinas tomorrow for business. So I likely won't have another video update until at least Friday. Okay. Now, if something crazy happens in the market, you can check me on Twitter. I will likely post charts when I do some charting from the hotel. Other than that, there won't be a video. However, I kind of went out of my way to make sure I covered all of the bases in this one to get you ready for the week ahead. I think the next week or two are going to be pretty significant for these markets. So now's really the time to pay attention. Some of this stuff I'm going to be very redundant to make sure that you and I understand each other, especially as it relates to gold and silver, because I don't see any buy signals out there with the exception of gold and silver. But even gold and silver could see another 10 to 20% sell off from here. And so it's kind of precarious. How do you navigate this right now? Because you're getting a lot of mixed signals. You know, if the Fed were to come out and only raise 50 basis points, which nobody's talking about, it's possible they might do that. You could get a crazy reaction in the markets. Incidentally, they could raise 100, right? So they're priced in for 75, but this is what you have to understand, that whatever it is, the charts are in confluence of resting on support at key levels, every single sector. I mean, it's really interesting what we're seeing right now. I think the markets know something is coming. So whatever it is, it's on the way. I think gold and silver are really the only equities who have the option of going up in either scenario, either the good one or the bad one. Okay. I think the only way gold and silver doesn't go up is if you get the worst one, which is like a liquidity sell off, right? Some kind of major cascading sell off event. So, with that being said, this video should cover you till the end of the week. We made sure to, go all the way through agriculture and everything. So, let's hop right to it and not waste any more time. I'll see you Friday. All right, guys, looking at the broad markets, we're going to start with the S&P. You have some small short-term divergences there. These are bullish. This is telling you that it's a little bit oversold in the short-term time frame. You'll likely get a bounce. I don't know if it makes it back above the trend. Maybe it touches the 50, but I wouldn't count on it lasting. The macro simply breaking down too much. I think we're going lower, certainly over time. And the key to watch is this level right here at about 36.40. Okay, because once you break that level, then you go into a secular bear market. All right. And then that's when the narrative, the dynamic, the paradigm changes for this whole thing. Okay. Now I will show you that you have somewhat of a double confluence here on the weekly time frame with the 200 at kind of the same level. And if you zoom out on the monthly, okay, you get another level of confluence with the 50 on the monthly. So it stands to reason that this level right here is going to be a very strong contender for a rebound. And to put it into perspective for you, from the price today, that's another 7-8% down. Okay. So keep that in mind. You might come down that far before you get a rebound. Whether it holds or not is to be seen. But even a swing trade possibility right there might be really nice. We'll have to watch it and see how it gets and how it looks when we get there. But I would expect at least a retest of that. Beyond that, you break that, I mean, you're coming down to the original targets of about 3,400. Okay, and 3,400 is a good, 12% down from here too. So it's just a wait and see. Obviously, the momentum is down. The macro is very bearish. There's not a lot of good news out there. We obviously have the Fed meeting coming up here next week. The rate hike is on Tuesday. So what I'll tell you is that 75 points is what's priced in. So if you get that, the most important thing is going to be what Powell says. So when you see the headlines of 75 basis points, it's rather meaningless. What will be more significant is what he says. So if you're really in tune to get guidance on a minute-by-minute basis, the key will be listening to his speech and seeing if he sounds more hawkish or dovish or whatever. But if he were to surprise to the downside with a 50 basis points hike, then I will tell you that, number one, the markets will probably rally, okay? And they will probably rally rather strongly until they realize that that 50 basis point hike was a bad thing, right? Because it means that the Fed has capitulated, and that's a bad thing too, right? It's going to reassure everyone that this fight on inflation is lost, which it has been lost since it first started. So in the case of gold and silver, that would be phenomenal. If the Fed were to only raise 50 points, it would be seen as the pivot. Okay, and that will give us a lot of confidence in what we're seeing in the gold and silver equities. And it would start the bull run at what is likely a bottom, near bottom in the gold and silver equities. So that's something really, really, really important to keep in mind. If they were to surprise to the upside with 100 points, well, then that's the catalyst you need for further downside selling. Okay, but the way everything is shaping up with the broad markets all kind of sitting in the same place, saying that they're due for a short-term bounce. And that's good confluence there. If you look at the gold and silver prices, we're sitting on key support, all right, ready for a move, also with divergence, telling you that we're coming for a bounce. I almost wonder if the Fed takes 50. I mean, I really do. I know that the market's priced in 75. I know that is not the most likely. I appreciate that. But that has been my call for months, that this September hike would be 50 points and it would be certainly the last meaningful hike. And I almost wonder if that's what we're going to get. But either way, that's how you can play the news. That's what you can expect. And, beyond that, we'll just have to see what the action looks like and what happens. But that's the near term, the DXY. It's, again, going on its parabolic assault with divergences in RSI. So if we come out on the weekly time frame, you have those same divergences. What kind of catalyst would make the DXY come down? Maybe a 50 basis points hike. I don't know. But whatever it is, the market seems to tell us that some kind of event, some kind of a catalyst is on the way, that, even the bond market's showing the same kind of thing, right? So what is it? What's coming? What is giving us all of these divergences, right? All the signals are there. Everything's resting on critical support. But these divergences are telling us that something's happening, something's coming in the news that the market anticipates. And I just wonder if it's 50 basis points. So we'll see. Whatever else it might be, I'm not sure. I haven't figured it out. But nobody's talking about it. Nobody even considers 50 a possibility. So it makes me wonder if that's the surprise event we might get. Just something to keep in mind. Just, it's always good to be open-minded to things, because, everybody gets stuck on the same idea and the same narrative, and that's often how people get distracted, even if they end up going 75. I'm making a greater point here. Just it's good to stay open-minded to the possibilities and see what happens. But, this U.S. 10-year is coming back up to 3.5%, right? We might be putting in a bit of a double top, right? The divergences are there. I just don't know, guys. Something's on the way, whatever it is. So stay frosty out there. We'll look at AMD real quick, because, again, the power of confluence, you can see where some of these bigger names stand and what the charts are telling you. And, we're at key support here. We're at the 200, right? We only have a few points left to go to get to this critical horizontal support. So once again, you have a major name sitting at major support, which is really a reaction moment. So as you go into uranium, as you go into gold and silver, everything's at the same place. Everything's at a reaction moment, with very interesting divergences in RSI telling you what's about to go up and what's about to go down. So this is going to be a very big week. Okay, so this is why I've been stressing the importance of accumulating in gold and silver and kind of getting prepared for this, because we might get something crazy, might get something surprising that starts something new in a lot of these commodities. So let's go check it out. All right, guys, let's cover uranium. Not a lot has changed. It's still pretty much the same story. It's kind of in nowhere, dead man's land, kind of in this gray zone where you've kind of lost, obviously, your opportunity to trim at good prices, and you still don't have a buy signal. So right now you are forced to simply be patient and wait to see what happens. I think the bad news for uranium is that it has such a tendency to trade with the broad markets, that with the backdrop of the macro and the broad markets right now and the Fed raise coming, it doesn't have a whole lot going for it other than the narrative of speculation that it's the next big thing. And yeah, that's fundamentally true. Eventually we're going to get there. But I think in a short-term basis, if you're looking to buy or sell, you've kind of missed both opportunities, right? You were supposed to buy down here and you should have sold up here. So right now, where you are right now, you're kind of stuck just waiting to see what happens next. This is clear and true across the board. And again, just to reiterate for anyone who may be new, I mean, look, We told you not to chase this breakout because we knew it was weak. This was an ugly breakout, right, with very poor follow through. So you had an inverse head and shoulders in confluence with the rest of the sector, looked very good, but you had divergences the whole time, right? You spent all of your volume just getting to the neckline, right? And then you were denied, and you came back and you got the rest of your volume barely getting above and then struggling, right? And then you had declining volume the whole way, telling you the whole time that this was going to break down. And that's exactly what it did. And, the best thing that could have happened was consolidation. We didn't get it. It got weak and it broke. And so now you're simply waiting on another opportunity to buy. And I would say it's not now. In fact, the best thing going for uranium might be is that up until the Japanese restarts, it was trading in perfect confluence with gold and silver. And gold and silver are getting ready to make a move, but they have the potential for 10 to 20% more downside in the event of a broad market sell-off. And if you pull some tape on some of these, if you were to come back down to trend, that's 15%. That's 15% for energy fuels, right? If we go to Cameco, sector leader, right, that's 18%. And so that might be something to consider. Maybe they're going to get back into confluence with this way if we get this kind of a big sell-off. That's possible, right? And especially if you look at it on the weekly time frame. I mean, you can see how far we've gotten from the 50. We're not a mile away, but we're far. We could at least come to test that. So you're looking somewhere between $23, $24 potentially on the weekly time frame. And that's something to consider. So bad news is you missed your opportunity to buy. You missed your opportunity to really sell. And now you're just kind of chopping around to see what happens next. I cannot recommend buying uranium right now at all. There's just no signals, guys. I can tell you that there are a few equities that are performing better than the others. This has been the case since the Japanese restarts. In fact, Global Atomic's now outperforming Cameco relatively because it is kind of at still barely lost its major support, where Cameco clearly lost its support. Okay, so that's interesting to see. That is interesting to see. But again, Cameco is the sector leader, so it's the one to watch primarily. But right now, you're just kind of hanging tight. And equities like SLX, I warned you again and again and again that on the daily time frame, it had strength to do something stupid and take a blast up. But on the weekly time frame, it was telling you it wanted to sell. And we have now broken out of this thing. It's waiting on the trend line. And again, this is another confluence too. You have a lot of these uranium equities that are sitting on massive support. This is a reaction moment, okay? This is a reaction moment, just like global, right? Just like a lot of these are. I'd say like UEC, that's not the best example. NXE, right? Cameco's really trying to get back above this one on the weekly. It's kind of sitting right there. So they're waiting to see what happens next. All right, so you're at a reaction moment. You cannot make any decisions here. You just have to wait and see, right? Your opportunities are gone for buying and selling. You simply have to hold. My net gut bias would be that we're probably going to go lower. And if we were to go higher, look, if uranium opened up 10% on Monday, I'm not so sure that'd be a good thing, right? It might just give you another opportunity to trim or sell if you haven't already. Because the way it looks is in a culmination of confluence sector-wide, it's just too weak, right? There's still too many mixed signals. There are no buy signals. Look at LEU. We pointed this one out too. Clear divergences, clear sell signals, right? We talked about it over and over. You're now down 16%. You're threatening to end up 25 to 30%, all right? And that's a base case. But again, if gold and silver managed to get back into confluence with uranium, it could be because they come down to a downside support level that's maybe 20% away from where we are. And that's when things start to break away for whatever reason. We'll just have to watch and see. I don't know that. I'm not calling that, but I am thinking about that as a real possibility here in the uranium sector. But there's nothing really to hash out that we haven't already talked about ad nauseum in the uranium space. Paladin, this upper trend line right here goes all the way back to 2007. Well, it managed to break out of both the short-term bull flag and this long-term trend. It lost the long-term and it now rested on top of the short-term. So if we zoom in, all right, we could see, that it's trying to hold support. And this is one more example of just holding that next level of support. And so what some of these stronger names are doing is putting in a good hold until next week for a wait and see. All right. So that's kind of your somewhat bullish mix that we're getting. But your bearish mix is that many of these equities have already lost key levels. All right. But again, even though they lost these breakouts, they are holding these new channels. Okay. They're holding these new channels. So they all kind of have them now. You can draw these in here. Well, see, it kind of lost this one on energy fuels. Let's copy it, make it. See, that's the right one. That is the right channel. So it peekabooed here, got back in, and now it's falling back out. Let's go across the board. Yeah, NXE is holding right there. So look, you really just have to wait, guys. There's really nothing new to report on uranium. Again, the spot price is tanking. We'll have to look at it on the weekly. It's rolling over, but it does have support here about $47. All right. So you'll have to see what kind of reaction you get there. There's a bit further to fall on the RSI, so, things have room to fall. Things have room to fall, and the broad markets don't look good. So I wouldn't be getting too excited right now about uranium. All right. I'd just be getting patient. All right, guys, so we're going to start with gold. A lot of people started freaking out because gold lost this magical 1680, 1675 number. And you can see that all it really did was kiss this trend line, which if you zoom out, let's take it to the monthly, for example. This is a 21-year trend that started in 2001, okay? And so right now, not only are you resting on this trend line, but it has a double confluence of support with the 50 on the monthly. So this is strong support, okay? This is a pretty big deal. So this is the kind of place where you really want to rebound in the bull case, okay? Because losing this double confluence would be a pretty big deal on a monthly time frame. Now, to have 6 consecutive red candles in gold is a lot, okay? That is not something that tends to last much longer, okay? So once you get 6 months of selling in gold, we still have 2 weeks left in this month to see how this candle ends. Ideally, obviously, you'd want to see these long wicks carrying the price up. But let's just say it were to sell off. What could you expect? Well, I tell you this much. If you were to look at near-term support, it'd be something about right here, okay? About 1560, 1550. All right, yep, see that right there? That's exactly what you're kind of looking for, okay? About 1560. So what I will tell you is that if we lost this trend line, okay, it would take something big in the markets. It would take a liquidity crisis. It would take a March 2020 type liquidity event to get something like that, right? And I'm just not so sure that you're going to get something like this, like 2008, right? Or even the COVID crash, wrong place, right here, without an event like that, okay? But incidentally, in both of these kinds of events, these big sell-offs was exactly when you needed to be buying gold. So whatever it might be that could happen to bring you down sharply like that, I can tell you, look, right there with confluence, again, this is the 2-week chart. You have the 200 right there at 1550, okay? So 1550, if you lose the trend line, 1550 has got to be the dead nuts bottom, all right? And so let's just come back into a weekly, zooming in a little bit. What I would expect would be to be something like a V bottom, all right? Just like this was, just like 2008 was, anything like that, okay? That's what gold would set up for if it lost this key level. It might not, I don't know. Again, to reiterate one more time so we're on the same page, that isn't going to happen without a major market-wide kind of crisis, all right? Which is possible. And you want to understand these possibilities. That way, if they happen, when the price does come down here, you're confident enough to strike on it, right? You don't, don't catch a falling knife. That's a bunch of nonsense. This is a strong level to be a bottom in any kind of a sell-off like that for a V-bottom rebound that will put you back over trend and back into trend, because it's more anomalistic, right? And so don't worry about it. Don't freak out about it. Don't get scared. Think of it as an opportunity, okay? And get your head ready for that in case that does happen. You can be confident to be looking for this number to strike when it happens, okay? I think the same thing is true for silver. Okay, so this is again the weekly chart, and you had some short-term divergences right here, positive ones that led to this rebound, but this has already played out. Okay, and so now you have room to drop again. I think you might test 17.50 again, and if not, you might test $16, and that is not a bad thing, guys. This is a good thing because you're looking for this capitulation moment, if we get it, to put in a permanent bottom. Now, I still think that you need to be accumulating right now, okay? And here's why. I'll explain it to you. First of all, you might not get this liquidity event. You might not. If we were to get a slow, gradual bear, especially a secular bear in the broad markets, that is not bad for gold and silver. Gold and silver will rise over time in the inverse to that. The only thing that's going to take the metals prices down is a sharp liquidity sell-off. So barring that, you're in excellent position. So you want to be positioned now at what could very well potentially be the bottom, right? So let's move into some equities and take this a little bit further and kind of measure. All right, let's say to ourselves, well, we know that this could be the bottom right now. We have a green flag to buy, right? To accumulate is the better word. To accumulate in gold and silver equities, okay? So what happens if we break down? Let's say we're saving some cash in the event of that sell-off. Well, where would we spend it? I got an answer for you. So the great thing about the way we chart and do things is that we're always looking for confluence. And as it turns out, I have found some what could be a major pivot level below should we lose support. Now remember, all of these charts again are in confluence. You have strong historical support in these analogues of 2020 and again in 2018. And again, even in 2015, they all have the same strong levels of support in terms of being oversold, in terms of breadth. It's all pointing to the same moments in time when gold and silver have always had strong moves that were clear buying opportunities in the markets. These charts are screaming at you to accumulate right now, and it's clear as day. So don't take this lightly, all right? So you need to be accumulating, but let's say you got some downside. All right, so starting with from where we are right now, all right, in the case of SIL, you only have about another 5% downside to that trend line. Okay, so that's big deal. So what? Well, where might you find support below that? Well, probably about right here. That's the bottom of the chop right there on that March 2020 level, okay? You see that? If you zoom in on the daily, you see it more. But there was a lot of chop here at what tried to be a bottom before you got this wick, okay? And it has confluence right here of this level. Well, incidentally, that's about 23%, okay? 23% in the SIL, all right? Keep that in mind. Let's go to the SILJ. Same thing. We'll pull some tape from where we are to the trend, about 7%, okay? Well, what's below that? Well, you've got about 17% and about 25%. All right, so keep that in mind. The GDX, if we pull from where we are to the next level of support, it's about 12, 13%. All right, well, where's support below that? About 22%. So you can start to see already some trends, okay? So somewhere between 7, 10% and about 22%, all right? So again, let's keep going. The GDXJ from where we are to next level of support is about right here. That's 11%. If you were to come down to about this guy right here, that puts us about 21, 22%. Let's look at First Majestic, AG. If we were to pull from where we are now to the recent low, that would put us at 17%. A little bit below that would be 27%. And that's a bit of an anomaly. That doesn't match up with everything else, but something to keep in mind. But here about 20 more percent in AG. Okay. In the case of pause, let's measure where we are to next level of support, 11%. Where would support be below that? About right here. That puts us at 23%. Okay. Agnico Eagle. Let's check this baby out. This chart looks so good. Again, just to reiterate one more time, look at the confluences here, guys. All right, where we are in terms of RSI correlates almost with March 2020. We're actually more oversold. Applies directly to 2018 and 2015. And again, at every single moment you hit one of these dates, what did you do? You rebounded massively, all right? You have so much confluence, not only in the equities themselves, but also in the ratios, also in the commercials going long. There's confluence with that 2018 date, the last time they did this, okay? You have the seasonality, everything, the macro backdrop, the way everything's collapsing, FedEx falling apart, right? You got the Fed about to hike again. Look, it's all lining out, guys. It's all lining up. The charts are singing to you, right? They're singing to you in the synchronicity, telling you that the time is here, okay? And again, to reiterate one more time, barring some kind of a sharp sell-off down in a liquidity event, this is the bottom, okay? We are at the bottom. So let's take a look at what we can expect for downside in something like Agnico. Well, to come back down to the trend would be about 8-9%, okay? And what would we get next below? It'd be about right here at this double bottom. All right, you have confluence over here too. That's a strong level, and that puts you at about 20-21%. So do you see how all these things are in such synchronicity in terms of where they are, not only right now but historically, in what kind of downside they all have? It's all about the exact same. It's all about the exact same. So let's look at SILV. This is SilverCrest, right? I had a lot of people ask me to share this one, so I'm going to hook you guys up with some analysis on this. Now, I will preface by saying the bad thing about this chart, okay, is that it only goes back to November 2015. You know, so this is only 7 years of history, all right? That's not a lot of history for a chart. But because of the way that we do technicals, it doesn't matter, because we use confluence, all right? And we will use the culmination, the collective song of this sector as a whole to help tell the story for SilverCrest, right? We don't need just the SilverCrest chart, right? We can look at them together in harmony. And what is it telling us? It's telling us the exact same thing. Despite the 7-year short life, it's singing the same song. And so what could we expect if we were to start selling from where we are to the next level of support? Well, it'd be about 9%. All right, and where could you find support below that? This might have been a tick here, about 23%. Just below that would be about 30%. Okay, so this is a bit anomalistic, but again, it's because of the short life of this chart that I think we don't have as much data coming back to some chop that would have been up here through prior cycles. Call it like 2011 and stuff. You would have been up here and you would have had a better place to find that kind of support. But we'll work with what we've got. I think, again, you have a strong level of confluence here to come back to this trend line at 507, okay? So I think between, right now it's fine if you don't have any, but 507 would be an excellent buy. Below that, what would you be looking for? Honestly, this level right here at about $4, I think would probably be it, because if we pull tape to about $4, that's 30%. That's pretty far. Actually, that's a little bit too far. If we pull tape, let's go to about $4. Yeah, 28% still. So what I will tell you is that the strategy for SILV should be like this. Get an entry now, all right? Anything between $5 and $4 on the extreme downside is going to be a winner, okay? So what I might do is say spend 25-30% now. And then if you get that sell-off, all right, then add a second tranche at 450 and then buy the rest at 4, okay? If you're afforded the opportunity, you might not get it, right? Because like I've said, you won't get it without that liquidity event. But that would be the downside strategy, is you're looking at 507, 450, and $4. And it's because of that confluence that we have with the rest of the sector that we can kind of get that confidence despite the short life of the chart. And this chart is actually quite good otherwise. It doesn't have anything broken on the RSI. In fact, the RSI on SILV plays out very well. And just to give you a little lesson on that, I can show you just right here. So look at this run up right here. All right, let's just get ourselves a nice little trend line and we'll put it right here. So do you see how we had a run up in price? And over that exact same period, the RSI on the top, anytime you have divergence on top of the RSI, that's bearish. It was telling you that a big sell-off was coming in. Guess what happened? You got a big sell-off, right? We had March 2020. The charts were actually telling you that was coming. And you got a what? 60% sell-off. Well, how much have we sold off now? Well, it turns out we sold off 60%. Okay, that was the extent to which that sell-off occurred. And so we have sold off this much from here to now. It's just taken a lot longer. And this is why, guys, this is how oversold we are. People don't really appreciate that, but we are that oversold in the gold and silver equities. But again, it continues to play out. I mean, if you look from here to here, you had the same divergences right here telling you a big sell-off was coming, and it did, right? And it continued to go down ever since, all right? So you can't take these divergences lightly. Even right here, well, that was okay. That wasn't too bad. It was more obvious here. This little chunk was telling you that it was going to sell off here. But incidentally, the RSI on the bottom is telling you that it's turning into a buy. Okay, and so even though you might come touch this trend line again, and hope you do so you can buy more at a better price, right? Because we are imminent. It's not just about the y-axis anymore, right? It's and obviously we want to try to get the best price we possibly can, of course, but it's really coming down to time now. You really need to start thinking about this in terms of time, all right? Because time is kind of running out on these babies, and you know, we're getting there. And it's not just this gold and silver sector alone and all the ratios alone and all that. There's confluence in the broad markets, right? The broad markets look awful, right? The macro looks awful. I mean, everything is pointing to this moment that it's getting here and it's time. And so we'll just take a look at the monthly. I haven't even done that yet. Yep, see, we lost the 50 there, but again, it looks good and nothing is broken on the RSI. It's healthy. And that's a really good sign, all right? There's no divergences, and divergences can give us nice signals, but there are none, which means it's just behaving normally. And that's a good thing. That's a good thing. And so I think that you can be very confident, again, to buy some now. Your immediate support, again, would be the same as everything else we talked about to this point, right? So 507, 450, and 4. And every time you go down, it'll be a bit more extreme, right? And so you can buy a little bit more than you did the last time. And if it ends up turning around and running away on us, then you can still have that cash to buy during the up run. So don't worry about FOMOing and missing out. Dude, you're at the bottom. If it starts taking off and you buy 5% up from now, so what? You bought 5% off the bottom, man. Just don't FOMO, you know what I mean? Just be patient. Let this play out. It could take another week or two to really kind of see what's going on here. But the chart looks good. It looks very healthy. It's in a nice tight range. The RSI is healthy. There are no issues of concern. It is trading in excellent confluence with the rest of the sector, which is a good thing. This is a sign of overall health. And I think overall that you should be very bullish about this company. It's, like Austin from the Gold and Silver Spaces, right? He's put out a lot of good due diligence on this. Austin Schmidt, you can find him on Twitter. And look, this is one of the ones you want to own. Even Don Durrett has this on his watch list. I think it's like his number 2 favorite silver company. So, okay, I want to kind of make a summary of what to do in gold and silver that makes this clear, because as I went through the agriculture starts, I really started to recognize and appreciate that 20% more downside might be rather realistic. And so I want to clarify what I'm saying about gold and silver as a standalone thing in its own little segment. I still think that you should accumulate here, but the risk to 20% more downside is significant. I think, again, to make sure that I am understood, I think that if you get the sharp sell-off, if there's a catalyst where things start really liquidating, I think you get it. I think you get the 20% more downside in gold and silver equities from where we are. It's possible. However, it's also possible that gold and silver remain entirely unique to the rest, because the fear trade will boon the precious metals prices, and this will lift, of course, the equities. This is also possible. And so I guess I just want to say that my position stands after I was done doing the charting, that I will continue to accumulate at these levels with the understanding that this could be the bottom. But the 10 to 20% downside risk is actually kind of real. So consider that for yourself and how you want to play it. I think what will work for you really depends on your allocation already. I think if you're already in a lot, then you need to hold the rest of your cash, right? Just hold the rest of your cash and see what happens. I think that if you have nothing, it's better to go ahead and start getting something here, all right? Because you can get your feet wet And then if we get that downside sell-off, then you have a lot of dry powder left to deploy in the event of this 10 to 20% sell-off. So it's going to be a case-by-case basis on what's best for you, but it does look like we might get some kind of a shock event. I don't know. But for what it's worth, I will continue to accumulate here, and I will accumulate much, much more if we get another 10% down, and I'll save some too for the event of 20%. But I don't think that I'm more bullish on anything other than gold and silver right now. I think that they are the two best plays right now. I think they're somewhat contrarian. You can't give this stuff away. Nobody wants it. It's boring. And, the sentiment is extremely low. And I think it's shaping up. I mean that. I do think so. And I have a feeling that this will age well in how this plays out. We either take off very soon from these levels, or we get this little kind of a V bottom and go from there. But one of these two things, I think, are plan A and plan B, and I'm quite confident that one of these two things does play out. So I just want to make sure that that's understood as a standalone snippet on the timeline of how gold and silver should be played, because of their unique ability to possibly withstand the sell-off and kind of diverge from the broad market as it kind of rolls over. So that gives them a unique property, benefiting from the aspect of fear. So we'll see how it plays out. This is going to be a very big week. So, I anticipate fireworks here certainly by the end of the month, one way or another. So stay on guard and have your mentality ready for what's coming, and have your price level set. So whatever equity it is you want in gold and silver, I don't care which silver name, I don't care which gold name, it doesn't matter. You can either buy some now, buy some at 10% lower, or buy some at 20% lower. Okay. And if it happens to turn up now, if this ends up being the low, then it will become apparent, right? Especially if it's performing when the rest of the sector's falling, and then you can just add on the run up, and that's okay. All right. There's no need to FOMO and go all in here. That doesn't make any sense. So don't do that. And if you get 10 to 20% selling from here, please don't sell, because you're going to end up selling the bottom. I'm telling you. All right. So just have your mind straight for what's coming next. Okay, guys, we're going to start in the agriculture sector. This is a company I've talked about once or twice in the past. This is John Deere, and this chart starts all the way back in like 1968. All right. And these are parallel channels, okay? These are perfectly identical lines that form a beautiful, 60-year bull channel. I mean, this is just amazing. And you can see that it's managed to break to the upper side of this channel, and it lost it and it gained it back. Look, I'm showing you this because I want to put something into perspective for you that might not be on your radar, which is, this thing is the kind of company you want to look for if things really go to hell, right? If things really go to hell and you're able to catch this somewhere down here for like $125, right? I mean, things really go to hell and you can come down and catch the bottom of this trend line. This is the kind of company you want to buy and own for 20, 30 years if, your timeline and your investment strategy supports something like that. And the same thing is true with a company like Grainger. I mean, look at this. Also a perfect parallel bull channel starting in 1971. All right. And, this is showing you some divergences. This is actually showing us that it's going to sell off. So look at this. All right. Let me thin these out. So you have ascending price. All right. And over the same timeline, your RSI has been flat. And from here, from this moment right here, it's actually descending. This, I think, is a bit of a bellwether, okay? And that's part of what I want to show you these for too, is that I think the downside's coming. I think that things are about to roll over. If you were to come and hit your 50 on the monthly, that's 25% down. Mind you, that has confluence with what we're looking at in gold and silver, okay, for downside targets. And it also just a smidge more than what we're looking at in uranium, all right? And so I would like to put this into perspective for you. Not only for these major names to be showing weakness and downside sell-off signals, but also to put new companies in your mind that you might not be considering. When you have companies that look like this over the course of 50, 60 years. And if you got an opportunity to buy them on trend at the bottom of the channel, you know, that might be the kind of opportunity you're overlooking that I'd like to share with you. Now, if you look at something like NTR, all right, so we're on the monthly here. Looks okay, whatever. We have this long-term support that goes back to, well, June 2020. All right, and it had lost it, gained it back, and lost it again. All right, and keep this in mind too. On the monthly chart, the 50 is at $61, which is just above this key support of 58. All right, keep that in mind. Let's come into the weekly chart. So there's nothing really broken or wrong about the RSI. There are no kind of clues that we can pick up. So we just have to look at the price action itself and see what it feels like. Well, it's in kind of this indecision mode, and we know that because of how many things we've looked at to this point. This is the key of looking at as many charts as possible and finding confluence, because what you're doing is you are resting on key support. This is the 50 on the weekly. This is a big deal. And mind you that the 200's at $63. All right. Okay. So just keep that in mind. You look at something like Intrepid Potash. All right. So this is a company that we had a lot of success with on this channel for a few times, right? We rode this whole breakout up here. All right. And we tried to buy back in, anticipating a rebound here at 52. And it broke down on us. So we had to take a small loss. So we lost some of the gains on this 100% move. But we've been waiting for an opportunity to get back in since. Well, I'll tell you that you're putting in kind of an informal, ugly inverse or head and shoulders right here. So you kind of want to see if that plays out, right? You've got declining volumes, all right, indicating a move is coming, right? The next time it breaks up. You kind of have an ugly pattern. You're resting on key support in confluence with pretty much everything in the market right now, right? And you have downside potential to your next strong support of about 30%. So my advice in the agriculture sector would be not to do anything right now. In fact, you probably ought to wait. If we come and look at something like Corteva, take a look at this. So again, this is the weekly time frame. We have attempted to break out of this resistance multiple times at $65. Haven't been able to do it. Well, as the price has gone sideways, the RSI has done what? Gone down. This is a bad sign. This is divergence in RSI. So you have one more major name in the agriculture sector, just like John Deere and the rest, telling you that there is major weakness building at these upper price levels. And so if you were to fall back down to your next trend line, that's again 20%. So we're shaping up, I think, to see 20% downside and some stuff. In agriculture, you can't buy right now. You got to wait. The signal's pretty clear. Whether it's the biggest of the best or whether it's, some of the biggest and the best in a more localized way. Look, you got to hold on. You can't buy agriculture right now. I think these are about to sell off at least 20%. So hang tight on these. I'm going to talk about the few rare earth plays that we have an opportunity with that I think are kind of realistic here. Vital metals, I already own some and I want to buy more. The key is when and where. Well, incidentally, on the monthly chart, what are you doing? You're resting on key support in what is effectively a reaction moment, just like everything else in every other sector. The confluence is astounding, and so something big is on the way. And I can tell you that if you were to drop, the downside to the first major level of support is going to be about 29-30%. I'm actually thinking about putting a stink bid on this because I buy the over-the-counter. Okay, and I'm going to do the math and see where that is, but I'm gonna put in a stink bid on this one to see if I can't buy about 30% lower from where we are and see if it gets filled. I'd be happy to own it there. I think this company is long-term going to be a good one. I'm hoping to have some guests on soon to talk to us about rare earths, actually, and hope expand our knowledge and help us level up in this sector, understand the fundamentals, the what's what, help separate the noise, how to do due diligence in the sector, right? Which companies are the best, and we'll see where that goes. But for now, it's companies like this that I'm really looking at, in addition to some like, let's see, where are we at? Arianne Phosphate. This is another Canadian play. On the chart, there's nothing wrong with it. It's just, you know, it's struggling. There's a broad secular bear market taking place, and it's having trouble ripping, right? But I think that if we can get something like a 20% sell off or a 30% sell off, I think I might put in another stink bid on this one too. DRRSF, it's the ticker over the counter, somewhere right around here, about 9 cents, about 0930. All right, this is something I'm looking to do because I want to own more of this company, especially for the long term, and I would be entirely happy to own it at that price. I mean, you've got a current market cap of $64 billion. If I could get that anywhere close to, 40, I mean, I'd be happy to do that. And so I think opportunities are coming here, guys. In the case of gold and silver, it's the only one that I'm not really sure if it breaks down with the rest. But as you go through the charts to see a lot of this confluence, it stands to reason that it may. So it's hard to recommend buying much anything other than gold and silver right now, just because gold and silver have a unique potential to react differently than the rest of the market. Other than that, it does look in confluence like everything's getting ready to roll over. And so I would encourage everybody to just, hang tight and get ready for that.